Ooh, ooh, ooh. Hi guys, good morning. We are live. Please, you can share the link so others can join. So let's wait for others. Let's wait for like 7 minutes. By 10 10 will start. 10 will start. Hmm. Topic today is not something you're going to miss today. Today's topic is very, very important and it will be a very interesting topic. This is something you guys really want to learn. Candlesticks, how to read the charts. So today's topic is it's not something you should miss at all. It's a taboo to miss today's topics. So we have 6 minutes more to wait for others. 6 minutes more to wait for others. So while we wait for others, if you have any question, you can ask. So regarding our last class, if you have any question, you can ask. so we can use that to weigh to others. So if you have any questions regarding our last class, you can ask. So you can use that to while we wait time, while waiting for others to join us. We have 2 minutes more. Okay, Mayor, welcome, Mayor. Okay, it's 10:10 now, and I believe we can start. So, guys, good morning. Happy Tuesday. Today, we'll be talking about the charts, candlesticks. time frame, basically how to understand those green and red candlesticks you see on the charts. So as usual, I'll be very slow so I can break it down to your understanding. Hold on, let me share my screen. If you can see my screen, please indicate in the chat. If you can see my screen, let me know in the chat, please. Can you see my screen? Can you see my screen? Can you see the trading view on my screen? Okay, let me check through my other phone. Please, I will appreciate if you guys are attentive and very fast to respond. I mean, you guys have not seen my screen. I believe you can see my screen. So you can as well zoom the chat, zoom your phone. I'm seeing myself, so you can as well zoom the chat so you can see it very clear. Now, today we'll be talking about candlesticks, time frame, understanding and reading the charts. So guys, so everything you are seeing here are candlesticks. Now, what you're seeing on the board here are what are candlesticks. That's what you're seeing on the screen. So let me explain to you how to read and understand these candlesticks. Now, the green candlesticks are the bullish candlesticks. The green. The candlesticks are represented with different colors, green and red. Some are represented with white and black. So it depends on the platform. But you can see here is green and red. So the green candlestick are bullish, while the red candlesticks are bearish. So whenever you see a green candlestick, just know that the market is what going up. Then when you see a red candlestick, you know that the market is what going down. But sometimes it's not always like that because sometimes you see consecutive candlesticks, then you will not see green or red in between. For example, you can see this candlestick now from this point now, from this point to this point is what is bullish. But you can see this same point now, you can see there's red here. Are you getting me? So that does not mean it's not what bullish. It's still what bullish because the red is still the red candlestick close on the same range with the what with the green candlestick. So it's here still what a bullish what trend. But generally when you see a a red candlestick, it's what bearish. Then a green candlestick is what is bullish. Now let me label these candlesticks for you to understand how it is. Now I will draw two candlesticks here and I will label them for you. Okay. Now we have two candlesticks here. We have two candlesticks. Let me color this one. Let me color them. Let me present them in color. Okay. So we have two candlesticks here. You can see this is the red and this is the green. Now, what makes this a bullish candle and what makes this a bearish? What makes this a bearish candle? A bearish candle and make this a bullish candle. Now you can see, let me explain to you why. Now we have what we call open and close. Now at every time interval, there is a open of a candlestick, which is this the beginning of that candlestick, and there's a close of a candlestick at every what time, which is what every what time frame. Your screen, screen don't vanish. How come? Can you see the screen now? So at every time there's a open and there's a close. Now, what does open mean? Open means the beginning of the formation of the candlestick, while close means the ending of what that what candlestick. So we have the open and we have the close. Now we have what we call wick. Wick is the thread, just like candle na normal our normal candle. Now that place you light, that place you put fire, that's called the wick. Then the white part, that white part that you can hold, that's called the body. The same thing applies here. That's why it's called what candlestick. Now this is the body. Now this is the sorry. Now the place I labeled red is the body. The place I labeled red is the body, and the place I labeled green is the body. Why this is the wick? Let's see here. Let's call the what the wick. This is the wick. This is the body. This is the body of the candle. Then because this is a bearish candlestick, then this part from here is called from this ending. This is the open. You can see the wick is pushing because for example now you see candlestick now. If you light it, if you light it under, what will happen? You see that the candle will be reducing. Are you getting me? To be reducing means it's going down. Hope you are seeing my screen. I hope you are seeing my screen. So if you light the candlestick from the top, if you light it from the top, the candlestick will be burning down. It will be reducing. It will be reducing gradually. It means what? It's going what? It's going down. That's if you turn candlestick upside down, it will be reducing. That means it will be going down. It's just hold on a minute. Sorry. I have one I have one candle before. I wanted to use the candle I have to show example. So when you hold the candle upside down, when you hold the candle upside down, now this is the trade. You hold the trade like this. When you hold the trade, if you light that trade, what will happen? You see that the candle will be what reducing. It means it's what is going downtrend. Now, if you turn it upside down, that's the trade is on at the bottom, and you light it here, what will happen? It will be what? It will be going up. It will still be reducing, but what is pushing the upside? That's what uptrend. Same thing applies here. So that's I believe you can understand what I mean now. So for a bearish structure, which is a downtrend structure, this part here is known as the what? As the open. As the open. Why this ending part is known as what? As the close. As the close. Are you getting me? So this is how to label what? Candlestick. This is the wick. This is the body. All this part, everywhere labeled red, everywhere that's painted red is the body. Then this ending part is the what? Is the close. While the beginning closer to the wick, to this beginning is what is the open. Now sometimes you see wick up and down. They have wick up and down. But the reason why I'm calling it a close or a open candle is because of what's the color. The color will make you understand, okay, it's opened here and what closed here. The color will make you what understand. So because sometimes you will see wick, for example, let me show you an example now. Now you see this bullish candlestick now. Look now, you can see we have wick up and down. So the reason why you will not call here open is because this candle is what is a bullish candle because it's what is a green candle. So you will always call here what close and here will be what open because it must close at the top because the candle will be open at the bottom, push towards the upside and close. That's how what candle is. Now, how are wicks formed? Why is it that some candlesticks have longer wick and some does not have longer wick? Now I want to explain to you how that wick come into formation, how you see the wick. Why is it that some have long wick and some have short wick and some don't even have wick at all? Now the reason is for every time from every time interval, there's a particular height that a candle gets to. There's no specific height. Any height that candle gets to, automatically a wick is formed there. Are you getting me? Now, this is how candlestick starts now. You can see the formation of candlestick start. Let's say for a bullish candlestick, start from the bottom. Now, if the candle from the if price rises from this bottom to this point, it means this is the what the highest range the candle what stick has reached. So during that time interval, if it's 1 hour, if it's 2 hours that it takes the candle from here to here, everything that is formed here will be from this place to this place. That's the what that's the height of the candle. Now at the end of the day, if it's for 2 hours time frame, at the end of the day, you can see that the candle might end up closing somewhere around here. Are you getting me? The candle can end up closing somewhere around there, making that candle to have a what a very long wick at the top. Sometimes the candle might end up closing around here, around here, making it have a small wick. Now, the size of a candle determines the impulse movement price has made. The size of a candle determines the impulse movement. Now, the size of a particular candle will tell you that this candle just move towards the uptrend direction. The buyers are dominating the market. That's the size of the candle. Because you are seeing a very long candle, a very fat candle. It's telling you now that there's enough buyers in the market. But if you are seeing a candle with a small wick like this, sorry, a small wick like this, it's telling you now that buyers just started dominating the market. I don't know if you're getting me. Like there are no much what buyers, just they just start what dominating the market. There's no much pressure. But when you see that the body of the candle is bigger than the wick, then you know that the buyers are dominating the market. I don't know if you're getting me. So that's essential about what candlesticks. So now we'll go to time frame so I can make you understand how candlestick formation plays its role. Now, for every candle you see on the chart, they are represented by a time frame. Now, candlesticks are formed at different what time frame. They have different time frame. Now they have from 1 second, 1 minute, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 20 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, 1 month, 1 year. All candlesticks are formed on individual what time. Now, for example, now on the chart you can change your time frame. On the chart, you can change your time frame. You can change to the particular time frame you want to see. Now on the chart, you can say, okay, I want to see the formation of candlesticks on a 1 hour time frame. I don't know if you're seeing my chart. Sorry, hold on. Are you seeing my charts? Please, if you are seeing my chart, just let me know that you're seeing my chart so I can proceed. Okay, good. Okay, so when on the chart, you can see this portion here, this part here. I don't know if you can see it very clearly. Let me see. Okay, watch my arrow. Look at where my arrow is pointing. Now you can see all these are the time frame, different time frame. Now you can see 1 minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily time frame, and 2 hours. Now you can decide which time frame you want to see on the chart. You can decide if you want to see a 1 hour time frame or a 30 minutes time frame or a 1 minute time frame or a daily time frame. Now, for every time frame you decide, they will show you the formation of candlesticks under that word time frame. Now, let me break it down more. Now, you can see currently I'm on a 1 day time frame. Now, on a 1 day time frame, each candlesticks you see here represents 1 day each. Now, you can see we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. Now we have 23 candlesticks here. It means 23 candlesticks have been because it's one candlestick per day because we are on a 1 hour, we are on a 1 day time frame. It means we are on a time frame of what 23 days. We're on a time frame of what 23 days because one candlestick is formation of what 1 day. Now you can see these green candlesticks now. This green candlestick now. This green candlestick tells what that buyer was dominated what the market. Buyer did what? Buyer dominated the market. That's why you see that after this small red candle, you can see this big candlestick that pushed the market towards the upside. Are you seeing it? Although what you can see now, you can see a week here. What does this week tells you? This week tells you that the market was dominated up till this region. It was dominated up till this zone, up till this zone. Sorry, it was dominated up to this zone before price reacted down, before price start what coming down, before it now pushes down. Are you getting me? To give you just this word, just this green candle. I don't know if I'm clear there. Are you seeing it? So you will see that the week is just the what? It's just the formation of the candle. The week shows you the height, the highest place that price reached before coming down. Are you getting me? That's why most times when you are doing your analysis or your strategy or anything, you don't usually regard weeks, because weeks are what? Manipulations. Which tells you that the price got there, but what happened next? It left that zone. It's just showing a what? Footprint. Yes, let's use it like that. Wicks are showing what? Footprint. You see the footprint of my shoe showing Adidas. Does it mean you see the footprint of my shoe showing Adidas? You pack that footprint. Does it mean you have seen Adidas shoe? No, you've not seen Adidas shoe. It only tells you that what? Adidas shoes matched this place. That's just what happened. So wicks are the same thing as what? Footprints. The same thing as what? Wick. Now you can see this particular candlestick. Now this candlestick now is a 1 day time frame. Now on this same candlestick, let me mark it out. Okay, let me use the recent candlestick to mark it out. Let me use the recent current candlestick. Now this is the current candlestick. This is the current candlestick. You can see from this zone now. Okay, let me make it smaller. Okay, good. Now I'm just trying to see if I can just map out just that as zone. There's no way I can map out zone alone. Now let me show you what I'm trying to explain. There's no way I can map out that zone alone. Okay. Now you see this green candlestick now. Okay, let me just mark it. Let me mark it with this. Now you see this green candlestick now. Good. Now this candlestick is telling you now that this is a candlestick that's been formed on a 1 day time frame now. If I reduce this candlestick now to a what? To a 4 hours candlestick, what how many candlesticks are you going to see? You'll see 4 candlesticks. If I reduce this candlestick to a 4 hour time frame, you will see 4 candlesticks under this place, because sorry, you see a day is 24 hours. 24 hours. So 4 will show you that will show you 6 candlesticks. Yes, 4 times 6 24. Show you see 6 candlesticks. Look at it. Sorry, look at it. Six. One, two, 8 candlesticks. Sorry, 8 candlesticks. Sorry. What am I doing? 4 times 6. Yes, 4. It will show you 6. Yes, sorry. 6 candlesticks. Yes. One, two, three, 4, 5, 6. Okay, now why is it showing you this half now? That's because look at let me show you now. Why this other half is showing now? That's because when we rule this line, we took out some part of this candlestick. That's what I'm trying to avoid. If I'm seeing that's what I'm trying to see if I can avoid this other candlestick, but there's no way I can avoid this candle. Okay. Do you know what happened? Let me show you formation of candlesticks that are not much. That are not much. Formation of candlesticks that are not much. Which coin will I check now? Let me see this. Still much. Okay, don't worry. I know what I'm going to do now. Let me use the same. Let me use this one now. Let me go and break it down again so you can understand. Let me go to uh, weekly time frame. Let me see how many candlesticks. Okay, that's still much. Let me go to monthly time frame. Good, 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 good. Yeah, perfectly. Yes, this is what I want. Now you can see we are on monthly time frame. Now it means this particular coin for the period of 3 months. This coin has been in existence for what 3 months. That's why you are seeing just three candlesticks here. Are you getting me? This coin has been in existence for what 3 months. That's why you are seeing what three candlesticks here. Now this is a monthly time frame. It means there's the formation of what? One candlestick per month. That's why you are seeing three candlesticks. One candlestick represents 1 month. Now you are seeing three candlesticks, it represents what? 3 months. So now this 3 months candlestick now, I want to break it down. So if I break it down to weekly, 4 weeks make 1 month, right? 4 weeks make 1 month. So if I break it down to weekly, we'll have what? 12 candlesticks. Now let me break it down to weekly. 2, 4, 6, 8, 10, 12. Look at it here. So why is this thing showing? Okay. Now I've broken it down to weekly. So on the weekly time frame, you can see we have how many candlesticks? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, which is 4 candlesticks per month. So you see on a bigger time frame, which is a monthly time frame, you can see we have 3 candlesticks. Now I've broken it down to what? To a weekly time frame. Now weekly time frame, we have how many candlesticks? We have what? 12 candlesticks. If I break it down to daily time frame, now it will not be how many candlesticks? That's like 30 candlesticks per month. You see 90 candlesticks. If I break it down to daily time frame, you see 90 candlesticks because 30 candlesticks represent 1 month. So it will be 30 candlesticks per month. Are you getting me? Now, the same way, if I break that daily candlestick, which is 30, I break one of them will be what per day. If I break one of them now into what's it called? Hour, then I will have 24 candlestick inside one. So if now be 24 times 30, the candlesticks will be so what many. Are you getting me? So that's how you what get candlestick. That's how you keep breaking it down to 1 minute time frame. So if I break this candlestick down to 1 minute time frame, at the end of the day, you will see up like 10,000 candlesticks. All of them represent 1 minute. So if I increase it now to like 5 minutes, it will reduce. If I increase it now to like 1 hour, it will reduce, and so on and so forth. If I make it a one year time frame now, say for example now, if I make it a 1 year time frame, it will just show you one candle, or 6 months time frame, it will just show you one candlestick. Okay, 6 months. Okay, 6 months is three each. Look at it here. Three candlesticks and three candlesticks. If I make it look at a 1 year, you will just see which is 12 months. Okay, that 12 months no, it's not clickable. Okay, this one does not have the 1 year did not show. Even the 6 months is not, it will show it will change. So let's go back to 3 months. Come on, sorry. Let's go back to 3 months to monthly. Good. Now, so we are back in the monthly candlestick. So each candlestick represents what the time frame you select. So if you select 1 month, it will show you one candlestick, depending on how many candlesticks have been formed during that what period of time. Now let's go straight into the charts now. Now you can read charts from a bigger time frame. You read the direction of the charts from the bigger time frame. Now, for those of you that wants to trade, that wants to analyze the market, you analyze the market from the bigger time frame. The bigger time frame tells you the trend. The bigger time frame tells you if the market is bullish or if the market is what bearish. And mind you, currently I have a pending trade that I took this morning. This was the trade. Let me just show you guys. I took this trade this morning and I shared it on my Telegram channel. Look at it. I took this trade on the 15 minutes time frame. Show you guys. So this was the trade I took. The trade was on gold. I posted it on my Telegram channel, on my Instagram page, on my WhatsApp page. Now I'm expecting price to what to tap on this other block for a what for a sale. So I pray it plays out during our live video, so I can even use it as an extra what example. Now back to discussion. Now you read chart from a bigger time frame. You read chart from a bigger time frame. A bigger time frame tells you if the chart is bullish or if the chart is what bearish. Then you analyze your strategy for an intermediate time frame. Now there's a way time frame works. There's a pattern that actually works. Let me explain that pattern to you now. Now there's what we call if you read your chart for example, for every time frame you read charts, it's advisable that you reduce your time frame. For every time frame that you read the chart, to understand the market structure, it's advisable that you go down to two times lower time frame to get your your entry. Two times time frame to what to take your your entry. Now this is how it is. Now if you read the chart on a on a daily time frame for example, okay, TF means time frame. On a daily time frame, now you have to go down to a 2 hours chart which is like 4 hours time frame. 4 hours time frame. You have to go to a 4 hours time frame. 4 hours time frame to analyze your the structure. Then you go down to a to a 1 hour time frame to do what to confirm your entry. Are you getting me? So this is basically how it works. This is basically how it works. So from a bigger time frame, you check the market trend, the market movement. Then you go down to an intermediate time frame towards to analyze your strategy, to check, use your strategy to now to see the market. Okay, market is bullish. Okay, fine. Because market is bullish in the bigger time frame. Now, what will happen next? You start saying, okay, I'm buying. Then you now go to a lower time frame to what to execute. I don't know if I'm clear with that. That's how it is. So the same thing applies if you read the chart from a 4 hours time frame. If you understand the chart, like now the market is bullish or the market is bearish in a 4 hours time frame, you will now go down to a 1 hour time frame to what to do your signal analysis and the rest. To say, okay, I'll be taking a long or I'll be taking a short. Then you now go down to a 15 minutes time frame to what to get your your entry and execute your analysis. So that's how it is. So now I'll be giving you an example on using this chart now. So now, for me now, and you need to understand something. Not all chart, not all coins, not all tokens are very clear. Some tokens you will just come in and check the chart. You will not see anything on the chart because you've not understood what the structure. Coins like that or token like that, what you need to do, you do what? Just avoid them because you don't understand the structure. You don't know what to do. You avoid it. For example, let's use BTC as an example now. Let's go to BTC chart of BTC now. So this is BTC and I'm on I'm on a daily time frame on BTC. Now I will zoom it in so I can see a clear what structure of the chart. Now on a daily time frame on BTC, what am I seeing here on a daily time frame? I can see that what BTC is what bullish on a daily time frame. You can see on a daily what time frame. Now why did I say BTC is bullish on a daily time frame? You can see it's going what up. Now, let me use my path to show you what I mean. Now, starting from here, from this point, you can see went up to this zone, came down, which is what this is the higher high, this is what higher low. Then it went and do it was the break of structure here, the break of structure towards the upside to give you what a higher high. And it came down here to give you what retracement. Then it went up again to break the structure and give you what the new what higher high. So this one you are seeing now is just a pullback. What you're seeing now is a pullback. So let me label it again. From this point, higher high, higher low, higher high, higher low, higher high, then higher low. Are you seeing it? So this is what structure of what BTC on a daily time frame. Now, it's very, very much possible that you can see BTC as bullish on a daily time frame. Then when you come to a lower time frame, like a 4 hours time frame, you will see BTC as bearish. It's very much possible. That's why most times the issue most traders always have is what mixing a bigger time frame for a smaller time frame. That's one of the misconceptions in trading. You are misusing, you don't know how to understand, you don't know how to relate both time frame, bigger time frame and small time frame. Now, for every trend, you can see the trend now. You can see from this point now, it went from this point to this point. It means everything that happens here on the bigger time frame is what bullish. Then from this point to this point, you can see it's bearish. This zone here is bearish. This zone here is bearish, but that does not mean the market is bearish. But you can see this region here. This region here is bearish. Are you seeing this region is bearish? But this bearish now is a pullback. Now, if you want to take shots, it means you will go to what? You will go to a lower time frame, like a what? A 4 hours time frame. The 4 hours time frame, that place I map out, you see how big it is now on the 4 hour time, on the 4 hour time frame. Let me show you that region I just circled now. Look at it. This region. So now on a 4 hours time frame, you can see this region is what? Is bearish on a 4 hour time frame. So if you want to take your analysis or you want to take your trade on this 4 hours time, on this 4 hours, on this 4 hours time frame, you have to sorry, if you want to take your trade on this 1 hour daily time frame, you have to check it what part by part, each zone. Is it the bullish trend or the bearish trend, which is what the pullback? You have to decide, then check that zone. Now I've mapped out this zone now. I've mapped out this zone. And this zone I've just mapped out is what? It's a bearish zone. So now if I'm to take this trade now, what I need to do is to what? Come down to this 4 hours time frame. Then I will start what doing my analysis. I'll start I'll start what doing what remarking it again now. Look at it, I'll start marking it again. From this point, I'll start marking it again now. Came down, lower low, lower high, lower low, lower lower low, lower high, lower low. I get me. So this is there's no lower high because it's a range. I get me. It's a range. There's no lower high here. It's a what? It's a range. The range is between the what? The previous what? Lower high and the current what? Lower low. Everything in between is what? It's a range. Now for this now, I just check my spread. So what will I do next? I'll now look for what? If there's a what? A, to this point. Let me use a rectangle. From here to this point. So if I want to take my trade or do my analysis, I'll do my analysis in this zone, in this rectangle. Everything I'm doing, everything I'm playing on the chart will be from this zone to, okay. Sorry, it's not, my screen is not showing. Sorry, can you see the screen now? Okay, good. So if I want to take trade on this, if I want to take my entry now, I'll be doing everything that would concern what from this height to this low within this range. Because this is the what current what range. So this range now is a bullish trend, it's a bearish trend. So I will take my analysis, my trade, I'll take it within this zone. But anything that make price goes out of this trend, then it's no longer in a what in a bearish zone again. Now it has respected what that continuous what bullish trend, which is what on a daily time frame. I don't know if you're understanding me. I don't know if you get understanding me. So this was the initial trend. This was the initial pullback that I marked out. So everything I was doing was on this pullback. Anything that make price leave this pullback zone, then it's not considered to be what a bearish trend again. It has now respected what the previous what external what structure. Now that brings us to what internal and external structure. Now the internal structure, that's the formation of everything. Is especially internal structure is especially what pullback. Internal structure is especially what pullback. That's what internal structure. The pullback, the retracement is known as the word internal structure. While the continuation is what the external word structure. Now you can see this trade now. I told you that this BTC is currently what on a bullish what on a bullish trend from the what daily time frame. Now you can see this trend starts from year to year uptrend. Now this retracement, everything you are seeing here on this retracement is a what? It's an internal what structure. The external structure is the high and the higher low. That's the external what structure. So every other thing you are seeing now is the word internal what structure. So that's how to differentiate between internal what and external structure. Now, so after doing your analysis on this 4 hours, this daily time frame, then the next thing you have to do is to what is to come down to a what to a 4 hours time frame to what to get your what your analysis correct, because you just understood now that the market is what the market is bullish. Then now you will not trade against the trend, so you'll be looking for a what a bullish buy, which is what entry that would what bullish. So now this is me on what on a 4 hours time frame looking for what my entry. Now currently now you can see this pullback now from this place now to this place, this pullback. So if I was to buy BTC, I will buy BTC from this zone here. I'll buy BTC from this zone here because this was my other block. I'll buy BTC. You can see how it did what a pullback, then retraced down and tapped into my other block for a what? For a buy. Continuation of what the trend. Now there's every possibility that BTC will do what? BTC will go above what this previous high. And there's every possibility that BTC might not go above the previous high. Because you need to understand that every current high is known as what resistance. While every current low is known as what support. Now, what is resistance? Resistance means what something that cannot what resist. It's like it's the highest point that's reached. Now, when Bitcoin goes to that resistance, it can probably what hits the resistance and come back. Bitcoin can go to the support and hit the support and go up. So there's every possibility that BTC can just keep what rotating within what the support and the resistance, and everything that will be happening there is what inside the what a range. Then you'll be waiting for what? You're waiting for a breakout. Now that will now bring you to what? To a snapper entry. So the next thing you'll be waiting for a what? A breakout for either the resistance or what or the support. This was exactly how I used to make profit on gold yesterday. Now let me show you what I did yesterday on gold. I did this resistance and support on gold and it worked perfectly on gold. Let me show you on the gold charts. Yesterday, I was on a what's it called? On a 5 minutes time frame. Yes, the 5 minutes time frame. So this was my chart here. This was it here. This was it, the zone here. So this was the current high. This was the current high, and this was the current low. So I marked this at this zone, marked this point at. Are you getting me? So I marked it at an range. So you can see that BTC was playing around this zone. It was going, it went up to its resistance and it was ranging inside this zone. It was going, I was waiting for BTC to either break this up or break this down. If it break this down, I will sell. If it break this up, I will buy. Are you getting me? So what happened? You can see BTC did what? BTC broke it and come down. So when BTC broke it, I took my buy from here and I short the market to the nearest what other block, which is around here. Are you seeing? So that was how I made my profit yesterday from this trade. You can see BTC went down. Sorry, the gold went down. So I did my scalping and that's it. Now currently now what are you going to do again currently now? You will extend your charts now. You will now extend your what? your support. This is the current support. Now, this is the current support, this is the current resistance. So now what will happen? You'll be waiting for BTC to go to either break what the resistance or break the support. So that's how you keep what you keep shifting your what your tools. You keep mapping out the zones, you keep shifting it, you keep mapping out after you have been validated. You need to avoid it. And what do I mean now? After that sell, you need to go back and say you want to sell it again. No, because most times you will not react to it twice. You just react to one and to move on. So after taking all you need to do is what is to move on, look for another opportunities on a particular trade. The first thing is you can I traded what's it called gold. I traded gold 5 times yesterday. 5 times before I slept yesterday. 5 times and the five played out very well. So you can see opportunity continuously. After that 5 times, the sixth time I wanted to enter the goal, I was not very sure. Although it played, but I was not very sure. That's why I did not take it. I said I'm very okay with what I've made. So I just ignored it. Now, there's every tendency that you can take your first entry, it will not work, your second it will not work, your third will not work, the fourth one might work. Now, it does not mean you keep taking a particular coin. You are taking it because you are seeing what you are looking for. That's the reason I was taking it. I'm not taking it because I was enjoying it. I'm taking it because I was seeing what I'm looking for. And what are the things I was looking for? I'm looking for what a change of character or a break of structure. That was exactly what I was looking for. So immediately you see a break of structure towards the upside or towards the downside, then you do what you buy towards that direction. If you see a change of character towards the upside or the downside, then you buy towards the new direction. It's just simple as that. You don't trade against the trend, you trade with the trend. If the market is going up, doing series of break of structure towards the upside, then you know the market is bullish. All you have to do is to do was to patiently wait for a pullback, then you buy to continue the market. If you see the market moving towards the downside, which is bullish, all you have to do is to wait for a pullback, which is what a retracement back, then you sell towards the what downside. That's just how to trade. Trading is very simple if you understand. Now, most times people will think that if you hit stop loss, your trade is wrong, or you don't know what you're doing. No, hitting a stop loss is part of trading. That's part of trading. It's just like the same, it's just like you buying goods from abroad. You buy goods from abroad and you have to ship the goods down to Nigeria. You find that the shipping fee has increased. Does it mean you don't know how to buy? Does it mean you don't know the right source? No. You have done your part. There are some things that are uncontrollable. The price character is not your fault. You've done your part. It's for you to accept it and what move on with it. So that's how it is. So most times when you hit stop loss, don't say I hit stop loss back to back. No, something. No, nothing is wrong. Your strategy, your everything is very, very much correct. All you have to do when you hit stop loss, go and check the board again and check the reason why you hit stop loss. If there's a mistake from you or there's no mistake from you. If there's a mistake for you, you correct the mistake. But if there's no mistake from you, then you accept it like that and you move on. Then you wait for another opportunity. Sometimes you might see another opportunity on that same coin. Sometimes you might not see any opportunity on that same coin again. If you check this pattern, you see a list of different coins. You can see all these coins now. All these coins are coins that I'm currently monitoring. All these are list of coins that I'm currently monitoring. This was the trade I took yesterday on my Telegram channel. And we're on massive profits. You can see this trade. I took this trade from this zone here yesterday. I sent it to my Telegram channel and we made like times three of per stick. You can see we even use 10x. You get me? You can see I saw this coin from here and I said, okay, sell the coin. So we sell the coin. You can see how it reacted. It was going down. So that's how it is. If I take this trade now and it hits stop loss, fine, we'll move on. We'll look for another trade again to take. You don't have to force your way in. You don't have to push it that I want to take this trade, I want to take it again. No, 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 no. You can't force your way in. You take trade because you see what you're looking for. So do you have any question to ask? Let me give room for questions. Let me give room for questions. If you have any questions to ask regarding the week's body or anything, please just ask. I'm giving like 5 minutes for us to ask questions. Okay, I'm going too fast. Okay, if you have any question to ask, is there any way you're not understanding? Just highlight. Okay, I'll be slow. If you have anything to ask, just ask me. If you have any question to ask, is there any place you don't understand? Just ask so I can revisit it. We still have like 30 minutes more. So I'm waiting for you guys to digest what I've explained since morning. We've talked about week, talked about body, the bullish candle, the bearish candle. We've talked about time frame. I've literally explained a lot. So if there's anything you've not gotten clear, you can just ask your question. Hello, I'm waiting. I'm waiting for you guys. Ask me questions, please. Ask me questions. Shows that you're following. I'm waiting for your questions. That means everything I've taught has gone in well, right? Can I proceed? Hello, are you guys with me? Hello, no question. So Let's proceed since there's no question to ask. Now, why beginners lose trades? The reason why traders or beginners they lose their trade is because they trade against the higher time frame. Now you need to understand that the market is going bullish. Okay, let's use an example of a car. Let's use an example of a car. Now, a car that is going towards let's go, a car is going to Lagos from Delta State to Lagos. Now, you notice that on the way, the car wants to buy fuel. What will happen? The car will not go straight to buy fuel. There's no way you can buy fuel at that there's no way you can just drive and just buy stop and buy fuel. No, you must burn. Are you getting me? If not, what reverse to go and buy fuel. Are you getting me? So now you see what will happen is you see that car will what? That car will reverse and turn to a fuel station, either by your right or by your left. Car will turn and buy fuel. After buying fuel, what will happen? The car will continue towards its destination. That is simply what's happening on the bigger time frame. Now, the market structure is bullish. It's going this way. Now, the markets now want to buy fuel. The price now will now want to turn and buy fuel, which is what the pullback. That's the pullback. So price will what pull back to buy fuel, then it will continues in one direction. Now, where we're getting it wrong is because that pullback, we always see that pullback as no, the car is not going to Lagos again. Car is going back to Warri or car is going back to that state. That's why we're always getting it what wrong. That's why most times we're always tucked in the market. Go we saw the market going forward. Then when the market just reverse small, just to pull back, just to what gain momentum, just to rest, we say, no, the market is going back, it's going back. We enter the trade that's going back. Then no what happen again. Price will what move and market will give us. So that's one issue traders are having. So it's very, very important for you to what understand the time frame, look the direction the market is going in the bigger time frame. Then everything you have to play is according to what direction. Only if there's a if. And what is that if? If there's a what, there's a change of what of character. That's what I saw on this chart. Now I'll be using this chart as an example to call it a day. So I'll be using this gold chart as an example to call it a day. Did a break of structure towards the upside. Then what happened is it came down. The market is supposed to come down, react to here. The way it came down from after doing a break of structure, it came down. You can see how it came down and it reacted to here. The market was supposed to just what up and keep what going up. But what happened is because the market keep coming down. Did they what change of character? Then did they what a break of structure towards the downside? Then what coming down. Are you getting me? So now the market has done what change of character. Now the market is what's going down. So that's why what I map out my other block responsible for the what change of character for a what for a sell. Now everything you are seeing here is happening on the what on the 15 minutes